Case study: EU trade policies and Brexit. The European Union (EU) is one of the world's largest trading blocs, built on the principle of free movement of goods, services, people and capital among its member states. For decades, EU trade policies have shaped global commerce by setting common tariffs, negotiating trade deals, and creating a unified internal market. However, Brexit, the United Kingdom's decision to leave the EU, offers a fascinating case study on how trade policies function and how their absence can reshape economic realities. EU trade policies, a brief overview. The EU's trade framework is based on two pillars. 1. Internal market member states enjoy tariff-free trade with each other, standardized regulations, and harmonized product standards. This reduces transaction costs, prevents duplication, and creates a level playing field. 2. Common external tariff. The EU sets a single tariff rate for imports from non-EU countries. Individual members cannot negotiate their own trade agreements. Instead, the European Commission negotiates on behalf of all members, giving the EU significant bargaining power on the global stage. These policies benefit members by offering market access to nearly 450 million consumers while protecting domestic industries through common rules and safeguards. Brexit, a turning point. When the UK voted to leave the EU in 2016, one of the key issues was control over trade policy. As an EU member, the UK could not negotiate independent trade deals. Brexit was, in part, a desire to regain sovereignty in areas like immigration, lawmaking, and trade. The UK officially left the EU in January 2020, and a new EU-UK Trade and Cooperation Agreement, TCA, took effect in 2021. This agreement eliminated tariffs and quotas on most goods, but introduced new non-tariff barriers such as customs checks, paperwork, and regulatory divergence. Impact on trade: 1. Goods trade. Before Brexit, UK businesses traded freely with EU partners. After Brexit, border checks and customs procedures increased costs and delivery times. Small and medium-sized enterprises, SMEs, faced particular challenges adapting to new rules. 2. Services trade. The UK's service sector, especially financial services, faced reduced access to EU markets. London's role as a global financial hub was affected as some firms shifted operations to EU cities like Frankfurt and Paris. 3. Supply chains. Complex supply chains in sectors like automotive and agriculture were disrupted. Just-in-time logistics became harder to manage with added delays at borders. Broader lessons. Brexit highlights several important lessons about trade policy. Integration versus sovereignty. Participation in a large trade bloc increases efficiency and market access, but limits independent decision-making. Non-tariff barriers matter. Even when tariffs are zero, differences in regulations, paperwork, and standards can significantly affect trade flows. Global bargaining power. The EU as a bloc wields more negotiating power internationally than individual countries like the UK. Conclusion. The case of EU trade policies and Brexit illustrates the trade-offs between economic integration and national independence. While the EU's unified policies bring scale and efficiency, leaving the bloc introduces new costs and complexities. For policymakers and students of economics, Brexit remains a vivid example of how trade policies shape not just markets, but also political choices and national identities.